Hello and welcome back, guys, to the channel. And on today's video, we're mainly going to be breaking down Volatility 100 index through a simple strategy that you could use to scalp this market and make a shit ton of money. Now, before we dive into it, make sure you subscribe, turn the bell button on for notifications, and let's get into the real shit, right? So this is V100. It's one of the most volatile. It is the most volatile pair in the VIX pairs, right? I mean, the it's a very volatile pair. It's a very liquid pair. There's a lot of movement. There's a lot of money to be made, and these are the type of pairs that I myself like to concentrate and focus on, right? Because we want to aim that we all want to get that cash, right? So this is going to be a simple scalping strategy that you could use and make a shit ton of money through this strategy, as long as you stick to it, you follow it, and you understand it deeply. Now what we're going to do is pick an area, right? An area of some simple price action, right? That's easy to display and understand, for the sake of you guys understanding, right? So what I'm seeing here is a very good price action area. Why? Because we had a reversal occurring in this area, right? Because we had the market pushing bullish here, and then forming this reversal pattern here, and then started pushing bearish from that area. Now this is the area that I'm mainly going to be speaking about. This doesn't mean that the strategy occurs or happens or is applied only in reversals. No, it's applied in any kind of price action, and of course in any market. But we're basically going to be dealing with V100 because we want you guys to get into it. So what we're going to be looking at is three simple things, in which I'll only speak about two of them. The third one is for the private mentorship. It's for the premium. It's for the premium guys. And if you do want to join the premium stuff, make sure you DM us on Instagram at official green pipsfx, and we'll be more than happy to receive you, as the poster shows. Now let's get into it, right? So the three things are going to be structure, SND, right? Supply and demand, and confirmation. But I'm basically going to be talking about these two and leaving the confirmation part for the private mentorship, for the premium guys, right? So we're only going to be dealing with what are so-called risk entries in this simple strategy that I'm about to show you guys. So the first thing that we're going to see or look at is structure, and the second is what is S&D, right? So from the point of structure and supply and demand, these two things are very important to have a full understanding on them, in order for you to be fully active and participative in this scalping strategy, so that it could work the most for you. Now you need to understand these two things in depth, and if you don't know them, then you could go back through the channel and watch out the structure and S&D parts, right? Because they're both things that are free in the YouTube and are taught in depth and more depth in the private mentorship. But it is what it is. So let's look at this area, right? So first of all, we had structure pushing bullish, right? Creating a series of what are called highs and lows, right? So we had structure pushing bullish in that sort of manner. And what this reversal here happened, right, is simply this right here, right? So structure now shifted from making highs into making what? Into making lows, right? So this is what happened. This is a simple view of all the things that happened within this place. Now let's see how we could have managed to position ourselves and trade this overall thing, right? So we were here, right? So let's zoom this area. I'm sorry for this trading implementation for binary. It's a little bit laggy, but it is what it is. So we had our lovely trend pushing bullish, and from this area here we still had a series of highs and lows being created, right? So boom, let's drop that a little bit. We had this high and this low, but what price did is that it failed to create a new high, and instead it created this short market structure, right? This shift of market structure, right? And once the shift happened, we then later saw what okay, let's put you a little bit down there. We then later saw a break downwards, right? So structure now shifted from breaking upwards into breaking what? Downwards, right? Meaning that this is a change of character. So from that change of character, what we are looking for is a simple move of price coming back up, making that retracement or pullback to fill those imbalances left, as well as mitigate whatever supply and demand supply zones were left there and mitigate it. And then now from here, price could distribute and push bearish with its true trend. Now that's exactly what happened here. As you can see, price after this break created what? A high and a low. Now from this area, what happened next, right? So we had price pushing bullish towards what that unmitigated supply zone, and once that mitigation was done, price distributed lower and created this breakout structure. Now the reason that we didn't look to position ourselves in this area here is that price moves fractally, right? So from the Dow theory of structure, right, we have to see a breakout structure twice for us to have a confirmation of a trend change, right? So we have a bullish trend like this. We need to see it break the first time, go back up for the pullback, right? And once this pullback is done, break for the second time, and then now look to position ourselves to go short with the trend as far as it wants to go. Now that's exactly what happened here, right? So price came back up and then broke again, right? So we have break one, break two. And that's a confirmed structural pattern that, okay, the structure has now shifted from bullish to bearish. Lo and behold, now we can start looking for them entries to take price even short. So all we need to see is two simple things, right? We need to see structure breaking down. Okay, that was structure breaking down, right, with this breaker structure, leaving behind that S&D zone for price to go back up, mitigate, and once that mitigation is done, price can now move or continue now with its trend as low as it wants to go. So that's what we're looking for. That's all that we're looking for in here. So okay, shit, what the fuck did I do? Okay, there, here, back we are. So from this area here, okay, let's hold it up a little bit. So from this area here, what we have is this break, and from this break we have now a high and a low, right? Sorry for the dirty charts, but it's only for educational purposes, right? This is all what it is. So we have a high and a low. That's a structural impulse, right? So what's next we're looking for is that S&D zone, right? The supply zone in this trend, in this case, because it's a downtrend, right? So we're gonna look for that most potent supply zone that's still not yet mitigated and requires mitigation. Lo and behold, what do we have? We have this up move here before the down move, right? So we now have all of this as our what? Supply zone, right? And with this low as our next liquidity run, lo and behold, price comes up, mitigates that supply zone. Now within this area, you could go back to the lower time frames and confirm this. Now I'm not going to talk about that because it's for the premium stuff, for the private mentorship. So it is what it is. But all you could do is like we're scalping this, right? So you could take like a short position, or let's refine it a little bit, right? Boom. So let's zoom into this area, let's make it a little bit wide, and like lo and behold, you do have this area here, right? Boom. So from that area, you could have your short position set there, your stop loss like above this high for more safety, or above this high here, right? Whatever you want to pick. That's completely up to you. So boom, right? And you have this low as your next liquidity run, right? Boom. So this is like a scalping strategy that allows you to like enter with a bigger lot, and you could take partials, or like whatever. That's completely up to you guys. So you could choose either to close like all of it here, or leave like 20% running. That's up to you. Risk management is not any financial advice. Okay, I don't know why I keep pressing that. Okay, boom. So we're back. So this is trade one, and from that area now we are looking to for the next setup, right? Patience is key. So we wait. We now start to analyze the overall structural move, right? So the best way, pinch your chart like this until you don't see them candles. So what you start to do is now follow how structure is moving, right? Boom. So from this high here, we have structure pushing down up to here, right? So what now we're waiting for, we have this. Okay, so this is like a break, right? We have an impulse and a break. right? Something like this, an impulse and this break here. What we're waiting for is price to make its way back up for the mitigation and then catch it once more and then go down with it, right? So this is a strategy applicable to every single time frame. You could go to the 1 minute and do the same thing as I'm displaying here. That's all up to you. With this low here as your next liquidity run, which is exactly what happens here, right? So we have a break, an impulse, this low as our next liquidity run. So we're waiting for what? A retracement to where? A supply zone. Now let's go in and look for that supply zone, right? Boom. So you have what? So you have this little thing here, okay? Boom, right? So you have this beautiful supply zone there, boom, based on mitigation. Now, the way I pick this, I'm not just cherry picking them. No, you can go back. If you don't understand what I'm doing here, go back and watch all the supply and demand videos, right? All of them, and you'll be fully informed and detailed on what we're doing here. So this is like a trade two, stop loss above the high, and you're looking to target the overall low. Boom, right? So the first trade gave us 2 RR, and the second trade, right, because you're only looking to target the lows, right, gives us 6 RR, right? Boom. So as you can see, that's 6.7 R. So let's just make it 6 R because there's spreads and whatever's but it is what it is. So that's trade 2 done. We're waiting, right? We want to see what? An impulse, a break. So again, we're looking for the same things, right? An impulse, a break. We're waiting for that retracement to that S&D zone and then catch it with the low as our next liquidity run. So okay, so here we are there. So what happened here is that we have now a high and a low, right, with a break. So that's what? An impulse. Next thing to look for, an S&D zone, right, a supply and demand zone that requires mitigation. So we now dive in and look for that zone. Boom. So there it is, right? So boom, you have this zone here, right? Brilliant zone there that actually gets mitigated, a little bit absorbed by this wick here. And if you like, you could go and watch the absorption and displacement video for you to fully understand that concept. So I'm not going to speak about that. So this is like your third entry, stop loss above the high for protection. Boom. So sorry, got a call there. Okay, and you're looking to target the low. Boom. So this is like entry 3, right? That gives us how many R's is that? 2.8. So like that's 3 R. So total, like we already have like 11 R until now. So the same thing applies over and over and over again, right? So just simple like a break, a structural impulse down, that retracement to where the S&D zone, you catch that trade, you target this low as the your next liquidity run. It is what it is, right? It's the same things happening over and over again, right? So it's a very simple strategy that when you stick to it, it could make you a shit ton of money. So boom, like this is like entry 4, right? Entry number 4, and this is like plus 4 R. The same things are happening over and over again. If you go here, you have the same thing happening here once again, right? This break here, this break of structure that leaves you with a high and a low, and from that area you have what? This supply zone right here on top, and like this is your entry number 5 right there. You're looking to target the what? And the stop loss above the high, and you're looking to target the low, and gives you a total of 5 RR. So as you can see, we've already made above 20 RR with this simple scalping strategy, right? And like it's scalping, you don't risk 1%, you can risk 5%. That like it could easily, if you risk 5%, that means 20 times 5, which is 100. So that's it, guys. So this is the magic and the brilliance of their strategy. If you stick to it, it could make you a shit ton of money. Now we don't want to make this very long. We want to like trade the whole area, because it's the same thing happening over and over and over again. So If you did enjoy the video, make sure you like it, subscribe if you haven't, turn that bell button on for notifications, and until the next time, guys, stay safe, have a nice trading week, and peace out.